Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get cut. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Oh man, that's too loud. Bring it down here. So, Jackson Hole this week. I don't know what the beginning of the week is gonna bring for us, though. I mean, if I'm looking here at the treasuries, although I don't think I have this having reset at the right time, because my range here on the treasury is a little bit too far. It hasn't moved that much already. No, they've only moved a little bit, but trading a fairly wide range overnight. We do have some action going on in the markets. Also, I think there's probably going to be some bearishness in the S&P 500 this morning. So we're going to see where it goes. Kids are starting school today too, so that should be interesting. I don't think it won't affect us, but it'd be interesting to see how that goes. Treasuries. So here we got overnight a little bit of a risk off move as an unexpected interruption in the Nord Stream pipeline scared investors in Europe, but then they said, oh wait, this is inflationary, and treasuries went the other way. So that's kind of what you got here this morning, and man, that is not a good look. Friday was pretty bad. Was sitting here, this is where we're on a Friday. Yeah, pretty decent move down since then, so that's not good. Maybe we've already dropped a little bit too much. Well, I mean, today could be a negative 4% down day. That wouldn't be very good, would it? Oil hopping a little bit here. Natural gas just gone whoosh. So again, some problems with the Nord Stream pipeline, right? Gold and silver pressured again. Oh man, giving up all those gains. I mean, it was going good for a while in gold. I mean, not good, but I mean, they were recovering for a while. All right, and then over here, oh wait, copper. The copper's doing okay, so it must not be coming from China per se. It's concerns in Europe. Here we got the 6E. Almost just barely above parity. I mean, they're below 1.01. So yeah, it's dollars looking strong again. Can you believe this? I can't even, 108. What? 108. The dollar index. Just a little bitty. Just a little bitty. And then Bitcoin pressured hard. Man, if we get a bad day today, dude, if Bitcoin drops below 20K again, yeah, there could be some ugliness if Bitcoin decides to go. Every time I get on the Bitcoin subreddits, well, not every time, but as of late, when I get on the Bitcoin subreddits, the posts that I'm seeing are like, why is Bitcoin crashing again? And I'm like, this isn't a crash. This isn't a crash. We had a crash, like not even 3 weeks ago. You've already forgotten? You've already forgotten what a real crash is like? This is wrong. I'm like, why? This song is not what it should be. No, I don't want this one. Moon boots should not be on that. Oh, that's why. Okay, let's go here. Wrong playlist. I'm like, no. Here we go. Well, that's not what I want at all. There we go. That's a little bit better. Moon boots is cool and all that. Okay, so 2.975. They're not actually 2-3% though. That's interesting enough. So the treasuries, the 10-year yield is, at least, is almost exactly where it was before when we left earlier. I remember leaving on Friday and thinking like, oh, it's gonna go up, we're gonna miss it. Da, 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 da. I actually think that's what's going on. All right, let's see here. Twitter, Joseph Wang, this post answers 4 common questions on the Fed's balance sheet. On quantitative tightening, it will show that quantitative tightening is happening, but partially obscured by TIPS adjustments and mortgage-backed securities settlement details, and it will show how the Fed handles negative net income and capital losses. Article worth reading. Actually, I'll open it up now. Like, I might not remember. Open that up. The aggressive UK inflation call from Citigroup is getting a lot of attention. It is aggressive because it essentially assumes inaction on the part of policymakers already under considerable pressure because of the cost of living crisis. UK inflation to hit 18.6% next year, according to Citi. Are you kidding me? What? That's a little crazy. I'm not saying that's like a crazy call, like it's unlikely to happen. I'm saying like if that happens, that would be nuts. Although I am a little bit like, is it really that bad? Larry Summers discusses the best hopes and worst fears from the Jackson Hole Symposium. My hope is that we will get clarity that the policy is not yet restrictive. That policy is not yet restrictive, that it needs to be restrictive if we're going to contain inflation. So he's saying it should be higher, right? And Brannigan Barrett. The weekly chart matters, so not really, but okay. Oil has been the key driver in consumer inflation expectations. Note the $40 drop since the March peak. So why does it matter so much? And in particular this week, economists believe headline inflation peaked July. Cool. Where the sticking point is around the stickiness of inflation at higher levels. Given Mr. Market pricing in 2 full cuts into 2023, this matters now. Some fundamental analysis. Europe is in deep due to energy crises. While we are seeing LNG imports rocket, at the same time nat gas prices rocket, we see switching between gas and oil in an already tight market. This matters. I don't like the technical analysis. Oil has 8 consecutive weeks of higher highs, 8 of lower highs. So he says because of that 92.75 matters, this price matters because it acted as significant support for the entire 2022 until start of August. We take out last week's high and anyone short is going to be forced out. Anyone not yet long will become buyers. That's probably true. But we would want to get in long before that happens if we're going to take it. If I was going to trade oil, $90 looks awfully attractive. That's a nice round number. Listen, let me tell you something. You want technical analysis? I'm going to give you a piece of technical analysis, okay? And this piece of technical analysis has a greater impact on markets than all this other bullshit that people are always talking about, okay? People like round numbers. If there's a round number, there's likely to be more liquidity at that price. 90 is a really round number, man. There's going to be people transacting there. There's going to be people transacting there at 90. So keep going back a little bit further here. Elon Musk was tweeting today. Mostly promotional tweets. It seems to me that it's like when he opens it up. How is anyone to know that draining the SBR could have a deleterious economic effects when one of the world's biggest producers was the subject of an embargo? What are we, fortune tellers? Jim Oreo. The snark. Yeah, good thing there's no geopolitical hotspots that could threaten global energy supplies. Am I right? Ugh. Okay, I see what's going on here. Jim, earlier than that, Jim had tweeted this: if the government is giving you a check, you can bet it's a distraction from something they don't want you to focus on. Basically, they bought your silence for $1,200. I would have advised you to hold out for more. Wow. German benchmark year ahead power hits Euro 700 per megawatt hour for the first time ever. This is going to be a disaster in Europe. So that I'm wondering here. I mean, there's the oil pipeline and everything, but it seems like that the energy concerns are really starting to come to a head. We are definitely getting, at the moment, some sort of a sell here. I think that it's probably more currency driven, though. It's probably more currency driven, but it does look like today is going to be a REITs Rise day. There you go. Morgan Stanley desk citing Wilson. I don't know who this Wilson guy is, but despite this relief rally, the macro backdrop looks grimmer than before. Seasonally, 3 weeks before in late August are slow for corporate commentary, and once conference season takes off in September, companies may continue to address macro weakness. It's a key risk here, I think. And I think I want to be long rates, but this place isn't perfect. Sure enough, there's the uptick. It's not. The 30 years seems to be moving a little bit more there. Something I see making this trade difficult is that it seems like we're getting some economic weakness here today. And that economic weakness is being driven by inflation. Look at that. I'm moving around a bit too much here for my liking. Well, I could have market ordered into 8.5. Other thing I see going on here is some severe flattening again. Look at the 2 and the 5. 3.3 versus 3.1. The 2 and the 5 are inverted. 20 basis points. I don't know if I'm going to get prices that I want. See, like the 30-year is on the higher end of this thing, but the 5 years barely come back at all. But the other thing is like, we did get what appears to be a sell meta order, and now it's ranging here. That's not what I would expect at all, really. Well, let's see if there's more to it. Well, The 5-year ticked down. The 10-year isn't sure if it wants to go. 10-year is fighting it. Okay, iceberg at 03 and tick up. 5 years still kind of dragging though. I should tweet this. I don't tweet enough. Yeah, see, that's not indicative of a large meta order sell. At least not in the 10-year. Maybe they're going to try it again here. Okay, back to 03. Will we see more iceberging at 03? Offer goes. You hit. Democrats took lead over Republicans in influential generic congressional polling averages. Interesting. I'm actually not too surprised, or let's say I'm not too surprised by that one. Like, number one, you're gonna see the pendulum go back and forth a little bit. It's actually a little bit too early to be seeing this, and the polling really changes when school starts, right? So, especially the one they're gonna move over to likely voters, and it seems like Republicans are much more likely to vote this time around, but we'll see. I think the thing that's interesting about the midterms here is that while the generic congressional ballot does matter, it seems that individual races matters more. Good morning, Octavius. How are you? So we want to know, like, how much are the Republicans going to take the House? We're going to have to look at a lot of individual races. Because, like, for instance, you know, even when the Republicans had an advantage, it looked like they weren't going to retake the Senate because some of the candidates weren't polling very well. Okay, so 700. So I should note here that 13 was the last swing low in the 30-year, but that is not the low from the overnight session. China's People's Bank of China urges banks to keep steady growth of lending. Oh man, I don't even. Okay, so another thing I'm seeing on Twitter was there was an assassination of a prominent Russian media guy. It was like Putin's Tucker Carlson, I guess is the way that it was described to me. And but it wasn't him, it was his daughter that got attacked. Everybody say that they're fascists. I don't particularly care about what their ideas are or anything, but it seems like everybody expects there to be political ramifications from it. And I don't even know what to think. I guess a week from now, we'll look back and see if it was a big deal or not. Radigan Barrett, the ECB is going to be forced to hike a lot more aggressively than they want come September. The narrative in Europe is about to shift in a meaningful way. 75 basis point hike coming in September. You heard it here first. Time to put the Bund/BTP widening spreads into play. Oh, that's gonna be interesting. That's a really interesting trade. I really like that one. He's saying that you want to go short the British bonds compared to the European bonds, or maybe even US bonds. He might be better off doing it against US bonds even, because Europe is going to have more of an energy crisis than the United States. And so if energy continues to play a part in inflation, the safest way to play it might be to go short British versus US bonds. And probably you will see that put some pressure on the US treasuries as well. Sure that that's part of the overnight selling. Although I think we're gonna have to get like in the 10-year 1801 down here was like the numbers from Friday. We did go a little bit lower than that here last night, but Brannigan has an awesome trade here. Like, it's not one that I can put on, but if I was a fund, man, that would be the place to play, man. Well, that's interesting. It looks like the 10-year is lagging a little bit now, as I haven't reset my DOMs or anything. 30-year is down 2 ticks, 10-year is down 1 tick. I kind of wonder here with the ZN, like, at which point do the treasury, if the treasuries were to keep puking, let's just say that we continue to have higher interest rates this year, much like we saw at the beginning of the year, at which point does the ZN start to puke? Like, because it's been elevated compared to the others, right? So is there a point at which there's these people with all of these bonds in the 10-year and they're like, oh, we got to get out of this? Where are those people that buy the 10-year, the type that are just going to hold it through to maturity no matter what? That things Seth wonders at night. Actually, I didn't think about that last night at all. Actually, you know what I was actually thinking about last night? I was thinking about woke politics, and I was wondering, can you play a little bit of reverse psychology with them? So it's like, if you define yourself by your immutable characteristics, we live in a society where, generally speaking, well, I mean, we live in a meritocracy, so we'd like to think, at least, that things like how hard you work and how smart you are going to be the things that determine your success and the things that we look for and reward in society. That might not always be true, but that's the general approach. Okay, the large offer there at 0.2 put on as they came down through here, and there was some large icebergs, but they cut through those very easily. 0.2 was a 3K. 0.1 hasn't broken yet, though. Iceberg the other way too. So there is a sell out there. They were just much more sneaky about it today than usual. Anyways, so what if you go out and you say, you know, how do you use reverse psychology to convince that group of people to, you know, work harder, essentially? I don't know. I'm not saying that group of people tends to be more lazy or anything like that. I have a child that's kind of like that, and I feel like he's being lazy. He's not living up to his potential, maybe. I'm not too sure if that kind of an approach, though, would be too inspiring to people. Don't be stupid. Yeah, that'll work, right? 0.2. ticked back up, but then the tick down was another significant one. And although the 10-year is lagging, it is kind of smoothing back out again a little bit. Definitely a flattener. I think we'd already be up 15 bucks if we had taken it in the 5. You'd have to pay up a lot though. Look at that. Ugh. Ugh. Is the spread really that far? Are you kidding me? That's pretty far. I mean, if I sat there at 3.1, I doubt anybody's gonna hit my bid. But what if I try putting it up at oh geez. Okay, they are showing flashing some right there. So what if I put it? Nope. Outside. Basically, it's too far away from this. Probably the furthest it'll let me go is there, right? Listen, that's the best bit I can give you guys, all right? Okay, they're breaching 01 now, which was Friday's high. Or low. Whatever. And we are at 3%. There was like a one over here at what, 13.5 a couple of times. Methinks there was probably some puking in through there. I think that 01 does appear to be a significant line. I'm seeing like the market making loss point right there at 01 as well. Kind of just a coincidence that they happen to coincide. So it looks like they might have a little bit of back and forth here. There's still a large offer at 02 half. 1700 on the upper end. It's the same thing in the 5-year. Falls. It's doing that thing where like it comes back and you're like, oh, maybe this is it. And then it slips right back down just as quickly. Yup. Although the 10-year itself, 10-year yield here, not moving too much. So since we've opened up here, let's say 620. Yeah, it's been about, wow. 34 to negative 658. $25,000 contracts or so net selling since the open. Super sneaky too. Like they were really slow about it at first. It seemed like, oh, maybe it's not going to go, and now all of a sudden it's. I'm going to change the title to European Inflation Woes Hit Markets. Spiking yields. I'm still not seeing the... okay. There's this guy with the 46 or so that shows it at 14 from time to time. The bigger bids are still like way back here. It's the 38. I'm willing to play the 10 tick spread game with you if you want, but you gotta keep your order there, dude. Come on. There you go. That's a little better. Otherwise, I'll just keep my order back here where everybody else was. All right. Man, the 5-year is just getting creamed here. That drop from 19 to 18 looks particularly... ouch. By the way, as I'm saying all of that, I don't know if I have the attention span for this morning in the 5-year. If I put my order at 14, it would probably fill. But I don't necessarily want a fill. If somebody's gonna fill me, it has to be a complete idiot. Like, really, who would sell into 12.5 right there, right? Okay, well, it's still kind of doing this thing. A lot of the time this past 2 weeks, I would say, I've been like, okay, it looks like it's kind of flattening out here a little bit and we might get a break, and then it keeps going. So I'm a little bit wary about saying what I'm about to say, but I do see some signs in the 30-year that they have found a liquidity hole and that they might range in this area for a bit. But the 5-year is just like not letting up. Like it should be easy to clear that offer there at 17. Okay, they did. And then did you see that almost as money sold into it? Yeah, it was coming back though. But just some it looks very weak. The 5-year looks very weak. don't like holding this order out here. I mean, in the end, it's probably fine, but I am kind of sitting here like, I'd rather focus on what the 10-year is doing here. 30-year actually breaking out at the upper end of its thing, of its range. That looked like it might have been a significant uptick at 1/2. So the thing I'm keeping an eye on at the moment is that I do see oil taking a pretty heavy plunge here. It's only getting back to the overnight lows, so it may not be a significant point, but it's enough to make me wonder here with the 10-year getting right to 3%. There goes the 5 again. Woo! Another little stop run. Just like I was worried about. Although there's a pretty big order at 118 even. Yeah, you'd always expect there to be a large order at even spot. It's something. It's something. They're not going for it immediately either, so. You actually saw more market buying on that further push in the 5-year. That's really interesting. I haven't seen something like that in a very, very, very long time. That's the sort of thing that I remember seeing that, and I'd be like, this is the reversal, and I would go for the reversal. I don't think that going for a reversal would be too wise in this particular. It's possible. Don't get me wrong. It's possible that this thing could reverse and we could end up at the overnight highs in no time. It's totally a possibility, but it looks like that this drive is being driven by some significant concerns on the macro front, and as such is likely to be persistent. So I don't like going for the reversal trade unless it's just for a few ticks. Oh, what did I miss here from Larry Summers? I hope the administration does not contribute to inflation macroeconomically by offering unreasonably generous student loan relief or microeconomically by encouraging college tuition increases. Every dollar spent on student loan relief is a dollar that could have gone to support those who didn't get the opportunity to go to college. Student loan debt relief is spending that raises demand and increases inflation. It consumes resources that could be better used helping those who did not, for whatever reason, have the chance to attend college. It will also tend to be inflationary by raising tuitions. The worst idea would be a continuation of the current moratorium that benefits, among others, highly paid surgeons, lawyers, and investment bankers. If relief is to be given, it should not set any precedent. It should only be given for the first few $1,000s of debt and for those with genuinely middle-class incomes. Says Larry H. Summers. So I'm still seeing this 01 price acting as relatively significant, but it's just there's trades on both sides of it. Now they're below it. Spent a little bit of a time above it. Now they're below it. There is some buying coming into the 5-year. I do wonder what's going on in the 5-year. That could just be profit taking, but that was about 3 to 5,000 contracts in the 5-year that traded back up. And the treasuries have kind of paused, so that could lend some support. Yep, their 5-year comes back pretty aggressively to the higher end of the range at 02, where that large order at 02.5 has been hanging out. And oil breaking lower. I do wonder. It kind of seems like what's happening here is the treasuries are pushing down because of concerns about inflation in Europe. And as we get those concerns about inflation in Europe, concerns about a recession rise, and because concerns about recession are rising, we're seeing oil fall. And so then the bonds back off. That's kind of the way the correlation is playing, at least for the moment. They do seem to be moving relatively freely between 118 even and 118.02. So I would say liquidity hole at 01 probably. Yeah, Mohammed El Arian, there is a number of disconnects. There is the one between the market and the economists, but there's also the one between the markets and the Fed, says El Arian. It is the US that has the potential to avoid a significant downturn if we get the policy right. Well, but I don't know. Given the market action that we see right now, this morning, does the way that things turn out in the US actually matter? If Europe falls into a recession and has a real energy crisis, I mean a real crisis, like they were saying in the UK, 20% inflation year over year, does it matter what's going on in the US? That's going to hurt the global economy either way. Now, another thing is that on that move, the pullback, the 5-year led a little bit. So we had some flattening. It is steepening back out. The amount of flattening that we had was not really a ton in the larger picture. I mean, it looks like there's a pretty extreme imbalance in the volume, but it was only like 3 ticks. Down tick. Let's see, there's volume trading there. Are we getting this thing again where they decide to buy the 10 bonds when the 10 gets to 3%? Oil falling here though has to be a driver behind this. I mean, I could chalk up what I'm seeing in the treasuries here down to just a pullback, but I feel like that oil has to be playing a factor because oil is just getting hammered so hard. Wow, the Dragon Ball movie topped the charts over the weekend. 20 million in ticket sales. Okay. At 3%, it doesn't make sense to buy the S&P for the dividends? Well, I mean, if you're only in it for the dividends, then sure. Certainly a lot of the demand does move over to the treasuries at 3%. Okay, so there had been a large order at 0.2 for quite some time. They did trade through it and there was 4K there. So it looks to me like there was a large sell meta order. Probably those guys had their icebergs sitting at the back and they got lucky and their icebergs got filled. So the guys that had to sell, if that was like a block trader selling, he's probably pretty happy. But that doesn't tell us what the next set of orders is going to be, right? There could be another leg to this. We'll have to see. I'm curious to see if we do get some more selling, if it does this, oh, we just slump all the way back down really easily again, sort of a thing. But at the moment, it does, you know, it doesn't look like that's what's doing. Car prices have dealer markup now, extra 3K on Kia Forte. Okay. Well, I've seen a lot of interesting commentary on vehicles of people saying like, well, okay, we had this supply problem, but now that we're through this supply problem, who's actually going to buy all these cars? Because, you know, I think there is a good question to like, can anybody really buy a car right now? Given the current economic, well, when you're watching the market here this morning, do you really want to buy a car? There was a large 2K that got put on the offer there, but then it pulled at 0.3. kind of is suggesting I reset my DOM here though. Oil pulling back now. I'm going to zoom in here on oil because it's just does look very active. We also saw a pretty significant move in the 6J coming back up here with the treasuries. And gold moving back up. So it was right there at 03, right? Yeah, it was right there at 03. And the buyers are being a little shy about hitting that price. Because I do kind of wonder if you put a 2K on there and then you convert it to an iceberg. So I'm watching that 03 to see if they trade through it, that if there's really an iceberg there. But they didn't trade it. Was a decent amount of orders lifting us back up though. It was about a 5K pullback. Flattening again. Okay. What? I have a baby apparently. Hi, baby. Well, buyers, here's your chance to push me out of my position when I'm slow. I'm holding the baby. How are you? He's looking at me like, I'm not sure I should be here. I know. Oh, come on. Don't be grumpy face. Oh. This fall back down has been kind of pretty even across the board. Does coincide with oil turning again. Yes, that is fun. Waiting is fun. Except for when you're blowing out, then that's not. Just like when you blow out your diaper, that's not fun either. Yeah. Oh, ouch. Whoa. Whoa. What's that? Okay, so that was the S&P 500 open. That's what that was. Okay. But still, they sold it down 2 ticks just like that on the open. And we are seeing some immediate selling in the S&P 500 on the open. Yeah. You're smiling at me? Yes. Can you see him? Oh, yeah. You can't really see his face very well on camera, unfortunately. You need the camera in a different spot so that your head's not blocked by the microphone. So there is so the liquidity there in that area that they just swept through does not look very good. He's way more precious than level 2. Yeah. I hold the entity that I hold in my hand represents hundreds of thousands of future income that will have to be invested into his development. Yes. Children are very expensive, aren't they? Yes, they are. Uh-huh. No, it's fine. That's the whole point. Little mini trader, maybe. So his older brother, who is 2 years old, I suspect that he's a little autistic or ADHD or something. So he's 2.5 now. Yeah, almost exactly 2.5. Barely talks. And like, if I come into the room and I like yell really loudly at the top of my lungs, like he can hear. He'll react, but he doesn't really react. Like a normal person would be like, what are you doing, Dad? What the heck is wrong with you? Why would you just come into the room? And he doesn't care. He just ignores you. It's like, it's kind of weird. I can get him to, I can get him to say things every once in a while, but he doesn't really like to. My parents said that I didn't speak until I was almost 3, though. So I think he's like me. I think I could teach them to be effective traders, yeah. Although my mind, when it comes to the development of my children, is much less on those sorts of things and much more on, okay, how do you instill values into a young child so that they can be values that will make them more effective in life? That's what I feel like right now, because I kind of seeing what the kids are doing, and the kids that have good values are successful, and the ones that don't kind of seem to be languishing. And I'm not sure if it's like something that you do, or if that's just the way that they are, or like how much of an impact those things are. But I feel like that there were things that I could have done differently. Hit that like button for the baby. Oh, you don't have to hit the like button. I appreciate you guys when you do it, though. You know what? It's summer. It's the end of the summer. This is the last week. Well, so here's the thing: is after this week, markets tend to change. Ooh, S&P taking another really big hit there. See, the treasuries are kind of stuck here between this economic weakness or inflation. I think that in the end, that the treasuries need to move lower. But you have that same yeah, I do. He has more hair than me right now at the moment, I'd say. I didn't shave this morning. You can see around the back. I didn't so I got a pretty good horseshoe going on right now. Yeah, so you see, when the S&P 500 takes the slam, oil moves down and the treasuries move up a little bit. Now, that was only like 2 ticks in the treasuries, but it's definitely happening. That's the correlation. But like, that was what happened in the overnight session, in the European session too, was at first the treasuries were rising because of the concerns about recession. And then they said, oh, wait, it's an inflationary recession. Interest rates are going to go up. What? You don't like inflation? Here, let's have a binky. There you go. See, you're fine. You're fine. You're fine, boy. See, I don't like that move. I don't like the way this is going. And right there, all of the TA people are going to be like, higher, low, buy it now. We'll see. They don't seem to like the S&P 500 declining like that, though. How is it almost? It's just a sea of red out there. The only thing on my board that is up today is soybeans. Oil is almost down 3%, by the way. And the NQ is down 1.6%. With the way that they're opening, though, well, I don't know. Every time that I see a little bit of a movement on the ES, I'm like, oh man, they're going to sell it. It's going to be a trend down day. And a lot of the time, that's just the opening range, right? Because it's been a while since we did like opening ranges and all that sort of stuff. So maybe the S&P 500 recovers here. I really hope it does, because if the S&P 500 and the NASDAQ don't recover here, then you're going to end up with another one of those 2 to 3% down days, which would be really ugly, right? It would be really ugly. But we don't want that. He's just looking at me. He's a little unhappy. I don't know what it is that he wanted, but he's giving me that look like he resents that his situation has not changed. You got a pinky. I'm pretty sure that you're okay. I've only been holding him for like 5 minutes, and I feel like a lot has happened here in the market. He's like, no, I don't want the pinky. You want it? You want it. Okay, S&P 500 trying to dig out of the hole. Oil still struggling though. Oh, and this is interesting. The Japanese yen fell back down. So the Japanese yen fell back down with the treasuries, but did not pull back when the treasuries pulled back up. So the buying that we're seeing in the treasuries here looks to be almost solely risk off. And maybe because of oil. But it's not following the currency correlation as closely as it normally would. Gold is continuing to see buying. It looks like there's a higher high too. I think she's back. She's not coming and getting him. What's wrong? See the trader in trading? No. You have to be at least 14. You have to be at least 14 and showing an interest in it. I think. So the tape is fighting it a little bit, but they did tick down to there. S&P 500 doing who knows what. I have to say the pace of the tape over there, like the volume that I'm seeing on the DOM in the S&P 500 is actually a little bit lackadaisical considering the situation and so forth. So I find that a little odd. Treasury is fighting this down. They recovered O3. Although I'm not really seeing strong signs of a meta order here. See if they can hit into O2. There's definitely a lot more liquidity at O2 now. Remember earlier, well, in the last 10 minutes, liquidity has improved between zeros and O2 considerably. Remember when the S&P 500 opened up that we were pointed out there was some 900, there was a bunch of 900s sitting there, and now we're at 1500s. So the liquidity has thickened up a little bit. I think she's back and she's just like, we'll let him hold him. But it's making me anxious. I'm anxious that something's going to happen in the market. I'm anxious that he's going to get unhappy. Okay. 5-year sticking up there. This is a steepener, I mean, we're still down. I mean, of course, there was like we were all the way up at like 09 at one point, right? So we're still relatively down here with the Treasury since the start of the session, but the curve has completely switched now. The curve is seeing that almost all of that flattening came back. Now we might be seeing some more flattening coming back in. We'll see. But right now, since the lows, steepening. Now, flattening or steepening doesn't necessarily mean that we're going to continue to move down or continue to move up. You could get both, right? You could get, hey, inflation is going to be a problem for a little bit longer. That means that the yield curve between the 2 and the 5 needs to steepen back out, right? Well, they've gone back and forth at 03 there quite a bit. S&P 500 almost recovered that whole initial sell. Are you teaching him how to trade ZN already? No. I have to tell you, holding the child while I'm in a trade makes me incredibly anxious. Could you see it on my face? I'm sitting here like, oh, what if something happens and this goes all the way up and I'm gonna have to move my hand? And well, 2 ticks down here in the 10-year, still kind of going back and forth at 0.2 no real signs, significant signs of like another large push coming here. I am seeing a lot more volume traded at individual prices and a lot more liquidity. Yeah, don't drop him if price spikes. I gave him back to mom. So what happened was, oh my gosh, I don't know what's going on out there. I have 2 junior high kids. One junior high kid walked. I guess she's driving the other one. So she went and drove the one just down the road. She's like, I'll be right back. I was like, okay, that'll be a minute. 15 minutes later, right? So that was making me anxious too. See, the Japanese, when I look at the Japanese yen, so just going through the correlations here, I'll show you the chart. When I look at the Japanese yen over there in the far left corner, you can see it's just completely trending down. When I come back and I look at the Treasury is moving with it in correlation somewhat, but it has not fallen down quite as much as the yen. Well, I might be missing it on degrees here, but you see there's a down move like that. So when I look at the Japanese yen, I'm like, oh yeah, that could go lower easily. When I look at the treasuries, I'm kind of seeing something where it's like this might bounce and come back up. That sort of thing doesn't really matter, right? But it's just kind of how much force is there in the different instruments. Now there is something going on because they are selling the 30-year here. They are selling the 30-year. I wonder if a steepener is coming in. Oh, this could be so interesting if we go lower and it steepens. Then I think things get interesting in the treasuries, right? I guess for now, the move, that last tick was fairly equal across the board. It's just, I am seeing significantly more selling, like the ZB is going to new cumulative delta lows. Gold wavering a little bit too, perhaps concerned that the treasuries are going to make another push lower. And there's the S&P 500 continues to struggle. They almost made it all the way back, and then it was resistance, and look at, and almost, well, I mean, it's only been 5 minutes. 5 minutes, it's completely flipped back down. Starting to see a little bit of pressure coming in on the 5-year side of it. Not really seeing the volume over there yet, though. Why is the dollar so strong today? Good question. So I believe that the reason the dollar is looking so strong at the moment is because the euro is looking so weak. So the thing, as far as I can tell, that really kind of sparked all this, first of all, I think that people were kind of prone to be selling it today. Like I expected the S&P 500 to be down. I didn't expect it to be down 1.6% right from the open. But because of the options expiration, I would expect that bears would try and use this opportunity to come in and try and sell, right? So that was kind of the backdrop. But then when they started out, it was really, things started moving when there was a halt at the oil pipeline again. So unexpected pipeline disruption. And we started to see those concerns about high energy prices in Europe. And it's kind of funny how like all the headlines come out and all of the concerns come out all at the same time. Iceberg too. Like again, like one of the first stories that we saw here on Twitter this morning was a prediction by Citigroup that inflation in the UK could reach 20% year over year, which is just like, wow. Like that's a real problem, 20%, right? So, oh, the news is at my elementary school. So that kind of came in. Treasuries initially rose. Then you look at the overnight, there was a rise in the treasuries before people turned around and said this means higher inflation, and the treasuries got hammered. It was Citi. Oh, maybe it wasn't 20, but it was like 16%. It was a high number. It would be too far back in my feed to find. But Mohammed El Arian was tweeting about it, commenting on the story. Yeah, it doesn't even sound real, right? Actually, since it does seem like such a fantastic claim, let's go and find it again. Okay. Okay. UK inflation to hit 18.6% next year, according to Citi. Investment bank raises forecast as wholesale gas prices surge. That's the headline inflation number that they're talking about, 18.6. Okay. So that was kind of like all at once, and that's when treasuries started pushing down, right? And as that happened, you started to see a move in the dollar, and the dollar rose overnight. I mean, the dollar was really strong overnight anyways, but look at this, man. Like they are moving they must be moving money into cash here, because they're not moving it into the treasuries. I mean, considering how much down the S&P 500 is and the treasuries are still kind of at like 2.95, kind of suggests to me that money's not going back into treasuries, right? That they're just moving it into cash. Who was it? I think it was the Morgan Stanley desk that was saying like cash looks attractive right now, and I'm like, yeah, but I don't want to sell my stocks. Just so with the stocks, I just don't want to get in the habit of making a lot of transactions over there. I'd rather just keep and hold the portfolio and always be long. Citi is trying to accumulate. It sounds fantastic, right? When with specifically the UK, like here's the thing. Here's the thing that I pulled out of that, Cyrilex, is that concerns about gas and inflation in the UK are way higher over there than we in the United States realize. That's what I took from that. And it does look to me like they expect the central banks to raise more. I don't know. That's where kind of the way that the market is moving and what everything else seems to be suggesting to me still don't match up, right? But that was another thing that El Arian was talking about. It's like there's a disconnect between what the economists are saying and what the economy is saying. There's a disconnect between what the markets are saying and what the Federal Reserve is saying. I am of the opinion that markets, well, not of the opinion. let me preface my opinion with the fact markets are not informationally efficient. So I am of the opinion that there is, in the current situation, a higher probability of there being market distortions because of liquidity needs and so forth right now than normal. And so if we're relying purely on the markets to tell us things, I think that the markets are more likely to give us bad reads here. I'm not talking about like on a day-to-day scalping basis, but just like from a macroeconomic basis, the bigger picture on several week time frames. Markets may be more likely to give us bad signals here, because I think that, especially in the treasuries, liquidity is crap, right? And so liquidity needs are having a stronger impact on the market than usual. Also, I really hate it whenever somebody says, oh, this bank must be trying to accumulate or sell because their in research arm says this or that. You got to realize that the research arms are completely separate. They're not allowed to talk to each other. Of course, there could be wall crossing, but that's like a very serious violation. There's a lot of apparatus and so forth to try and prevent that sort of a thing. So to say that it was like a strategy amongst all of Citigroup to do that would be preposterous. And the whole thing is just that what the desks do ends up being completely different from the research, because they almost completely ignore that research. Well, I wouldn't say they ignore that research. They definitely read that research and understand it, but they make their decisions based much more on what their flow analysis says is going to happen. So, while there was an iceberg at 0.5, 5,600 contracts, they were not able to get through. Liquidity hole at 0.2. The spread kind of uncertain here. Well, so here's a better example of what I was saying with the currencies. Okay, now it's very clear. Japanese yen is lower. Treasuries are still kind of wondering what they're gonna do next, right? So I suspect that there is demand coming into the treasuries that is outside of currency demands. But I also kind of wonder, I think that the macroeconomic backdrop that we're looking at here today strongly supports the interest rates rising, right? It's just the market's trying to sort out this contradiction between interest rates rising and the economy getting weaker. Okay, there's a take of 0.5. It was very brief, but it looks like whatever iceberg was there at 0.5 is gone. There's still 17K at 0.1. Yeah, some of that pulled. I think what I'm thinking here is very speculative, and I don't think that it matters too much to like direction or anything, but it does look to me like that today when the S&P 500 opened, that some liquidity returned to the 10-year. Like somebody came in and turned on their robot with the ES opening up. And I don't think that that was so that they could execute a large meta order. I think that it really has just been that somebody has been out of the treasury market all summer and they're coming back. It could be wrong, but now is around the time when you start to see that liquidity come back. That could be what we're seeing, because we've gone from, bidding 900s to bidding 15 to 1800s. Now, the thing is that the original meta order that we saw pushing us down happened at like 7:15. It's been well over 45 minutes. So if we do break lows here, I'm not so sure if it's a large meta order selling. Certainly could be the case, though, that if we get below 118 even, that people start to put pressure on it. Yep, top 10 bid offers total 30K. It's definitely more liquidity. I mean, it is a fact that the liquidity is thickened up. The question is just why, and is it likely to persist? And my theory is that it is just liquidity returning from the summer, and that it is likely to persist, which in the end is a good thing, really, right? Sometimes when I see liquidity stack up like that all at once in one point, that kind of makes me think that somebody's coming in to execute a big trade, because we have seen that in the past too. But I don't think that that's what's going on. I don't think that the behavior that we're seeing here in this area is consistent with that, because it's not really going anywhere. I am seeing some strong selling though. So one of the things that I do think is interesting is that if we go back to before the open, just to the start of this most recent sell, let's say, it's almost 40,000 contracts selling, which is a lot, right? Like, that's a really big imbalance. It's actually quite impressive that we've only risen like 1, maybe 2 basis points during that time, because there's a lot of selling pressure, market orders on the DOM here. So it does kind of seem to me like there's a really big seller out there, but they're just very, very gentle. Also, kind of still seems to me like there could be a liquidity hole between 02 and 01. So at the moment, that it looks like they're having a hard time being able to drive lower, even though they have been selling. But oil dropping here isn't helping, right? It is possible that you see treasuries fall and oil fall at the same time. It's just that hasn't been what it's been doing so far. Ooh, corn. What's happening in corn? There's just stuff happening all over the place. I guess one thing that we should probably consider from the change in the liquidity is that we may continue to see big moves, but they're not going to go quite as far, right? Like, a big move is probably more like $30 instead of $50 now. That's just because, I mean, that's a lot of market selling and not that much movement. It's been almost 30,000 through this whole area, 20,000 just in the area where we've the range that we've been trading down at the bottom. And I'm seeing maybe some steepening coming into the Qs and 10s too, by the way. Look at that. The 30-year is on its lows, and the 5-year is quite a bit back up there still. I just looked up at my Twitter, and my local news was doing a story about the Starlink satellites are visible again. I'm like, this is still news? That was a new low for the 30-year. Yeah, I'll tweet that. I don't tweet enough. I need to tweet more. Apparently the key to Twitter is just tweeting a lot. There's a good touch of the new lows in ZB and probably some stops there, but not much follow through. And the 5-year actually up. Oh, there you get the official story. Russia accuses Ukrainian agents of killing daughter of Putin ally. Oh, that was a good quick 2 ticks and hardly on any volume either. It's very curious to me that we can see such a strong trend in the order flow, but the price is really not following it today in the treasury at all. There's an uptick. 0.2 But see, notice those upticks are happening on relatively easy volume compared to what it took for us to sell. Gold's taking a hit, but back up towards its highs. Our friend Robert P. Ballin that you guys told me about to follow is tweeting a picture of his brief saying that if the 10-year breaches 3%, that they add to their gold shorts. But gold is moving up at the moment. I suppose if you wanted to go short gold, this would be a good spot, wouldn't it? But the treasuries aren't really moving down, and they're just like right below 3% and not really like quote unquote breaching it. Yeah, I'm seeing, well, for pit, I don't have it reset at the pit session, but when I came in here at like 6 o'clock when the volume started coming through, I had negative 30,000 and now I have negative 72. So during the active part of the day here, we have a net 40k delta or so in the ZN pit session, according to my cumulative deltas. And what I'm seeing here in the DOM does match that up. But price, you know, I can think of days where we saw 40k worth of selling, and those ended up being like, you know, days where the treasury moved a whole point, right? You remember those days, right? And this is barely budged. So it looks to me like there are some large meta orders in the market, but the liquidity is handling it. And I'm not quite sure what it is that the market makers are seeing that is buoying them, except for perhaps economic weakness overall. But I can't see it in like a correlation or anything. Now this move up may just be had to happen. Actually, it could be, you know, I think that there was a pretty strong meta order on that last push down, and so this right here may be post meta order pullback, but post meta order pullback is ending up like pushing them higher. Now the only consolation is that I don't think that it's too strong here in the O2 area. They could fall back. It depends on if somebody decides to pick it back up and run with it. The other thing though is that the 5 and the 30 are just moving way more than the 10 in both directions. I don't like to reset my DOM all the time, but like the treasures are so far out of lockstep with each other, I kind of can't get a picture of what's happening on the curve here. Ouch. I'm finding myself more and more stressing over individual texts. Like it's doing that a lot now. It just kind of tells you where we're at. Yeah, it's very slow moving for sure. I mean, look, the 5-year moved higher there. What I'm seeing here from this move up is steepening. Like the curve overall is selling, but it's not moving down because of the steepening. It's kind of weird to see, but not quite sure what's going on there with that. I mean, if we continue to see steepening and the 30-year like really puked, I thought that when they touched 07 that maybe we might see that, but it didn't follow through. If that had followed through, that would have been really good for a trade, right? But offers a little bit firmer there that time. I suppose that some of the buying could also be like you could attribute it to the dollar. I don't know, like this move right here in the dollar, that 20-cent move or whatever, like that just looks like crazy dollar strength. Well, there's O2 again. Oh, you know, I didn't notice that big move in the dollar correlated with the euro dropping below parity. So there you go. Carl Quintilla tweets, oil going negative for the year would be a mile marker. Yes, it would. So what is natural gas doing at the moment? So when I look at natural gas, I see a pretty strong move this morning, but it coming back with oil. ZN is not playing well with others. No, it's not, is it? Like, look at this. Look at how, like, if we were to line these up from the lows, right? The 5-year moved way more, and the 30-year moved a little bit more than the 10-year. Like the 10-year, it looks like that the liquidity has increased substantially more in the 10-year than it has in the others, and that is preventing it from moving. It's interesting to think about. The markets could have liquidity demands distorting our read of the markets in terms of like macroeconomic perspective on a longer time frame. But then what's going on here in the treasuries may not be the key tell of what's really going on. The thing that seems to be the most out of whack, the one that's most surprising to me and is making me go like, what the hell is going on, is oil dropping from $90 all the way down to 86.5. Big drops. I can't explain that one. I don't think that especially since like we're seeing economic weakness, and that's really crazy to me because it seems like the economic weakness was triggered by high oil prices, right? But they were probably going to sell it today anyways, even if there hadn't been all that concerns about oil prices and stuff in the European session. Now in the treasuries, if this is what it's going to be like for the rest of the year, we're going to have to start taking profits at 10. Trying to hold out for these big $50 winners might not work anymore. You guys get tempted to close out a trade a few ticks points away from take profit every time because of the fear that price will find support resistance right before hitting your target? Oh, well, I'm always thinking about getting out if it's back to break even, right? Oh, it's just a little bit away from your take profit though. I think that the thing is that I don't want to be getting out of a trade unless I'm seeing contradicting order flow, right? So like when I look at the market right now, do I see contradicting order flow? No. So first of all, overall for the session, it has been very much net sell. Okay, so that's the first thing. So I am seeing the orders go the direction that I want. But when I look at price, it's just kind of ranging in an area, and it kind of looks to me more like that we're stuck in a liquidity hole around 02, and that while there are some meta orders in here, they aren't super huge ones, right? So when we're in that kind of a situation, my expectation is that price is going to mess with you a little bit, right? So if I'm just scalping and trying to take advantage of the liquidity and catch a small scalp, then sure, I'm gonna get out when it seems like it's turning. But generally speaking, I want to be an informed trader. I want to be taking a trade based on my expectation of what the future orders are going to be. So I need to see something that says, oh, the orders are going the other way, I'm wrong, right? And then I get out. So that could mean that I get out at break even, but it could mean that I get out at, you know, my full risk. But I want to give my trade as much room as I can to let it go, as long as the flows are supportive of my overall theory. Man, S&P 500 chart just looks sad. It's like, hey, I got it. I don't know, guys. I'm kind of tired. Let's just, move your stops to break even. Here's the thing. The closer you bring your stops in, the more likely you are to stop out. It's just that simple. It's just that simple. What else can you say? Like that game, I can go through and I can backtest. Every time that I backtest a strategy, I always will go in and say, okay, what if I set these set targets and do all this sort of thing? Or even like targets that try to adjust based on the volatility. And what I find is that when I do that, the results, it makes the results of my strategy more random. So I think the better policy is to base your stops and your take profit and so forth based on being informed, right? If I'm short and I hear some piece of news that's really, pushes treasuries down, then I'm gonna bail. Now, in this situation, the problem that I have here with this, the situation that I'm in is a little bit different, right? I'm came in with the expectation that we would see rates rise. We have seen that a little bit. Is just not as much as I have been. And so if we're going to see a large meta order, I would have expected to have already seen us sell a lot more than this, right? Anyways, I don't like being in a trade for almost 2 hours and it having not moved very much. That kind of says, well, it's not like it's the market's going against you, but if you were informed, you should have seen the flow already, right? Maybe you're early. Maybe an hour from now, European close comes through and then things change. Decent little blue candle there in the ES. That might actually end up being their best candle of the session. So when I look at the well, I don't have a one range chart up, but if I had a one range chart up, it would have been this. You'd see this zigzag across O2 half. It used to be that's all we would ever see. And now it hasn't been like that all summer, and now we're getting it again. So in some respects, it kind of makes me excited to see the treasuries acting the way that they used to, but on another hand, the summer was kind of fun. We're definitely in the midst of a regime change, aren't we? We're definitely in the midst of a regime change here in the treasuries. It's kind of curious just because every time that I see like a real regime change in the markets, there's usually what is the word? Decisive. There we go. There's usually a decisive shift in direction and correlations, and I'm not necessarily seeing that today. I'm seeing a lot of movement. It seems like there's a lot of macro trading going out there today, but it doesn't seem to have come to any significant conclusion. It's a lot of the flow has been confusing to me to some extent. The 30-year looks like it's under a little bit of pressure. Oh, this is a great tweet here. The cryptocurrency community has long believed that if you create an automated box where you put clean and dirty money in and shake it around, all the money comes out clean rather than dirty. it's right. You put a bunch of dirty clothes in together and you just spun them around, just everything would be dirty, right? Okay, that's a little bit. So they broke out of that range. I don't know, to make like a new swing low or swing high, they would need to touch 118 even again in the 10-year. So, and that move was much like the moves up that we saw, where it kind of moves and it's not really a whole lot of volume to make it do it. Of course, the 5 years got a ways to go if they're going to come back down to their lows. So, the 2s and 10s. Steepening considerably here since the S&P 500 open. I've been really absorbed in the flow today, haven't I? On one hand, this move down seems significant, but on the other hand, almost everything that we're looking at, like the amount of volume that's traded, and we see in the volume profile and everything, says that they're still stuck in a liquidity hole, and that if they're going to break to new lows, that you're going to have to see considerably more sell volume come through this. You like the track? I'm just doing Stream Beats by Harris Heller on Spotify. I do kind of like with the music that I don't feel quite as much pressure to have to be saying something all the time. Man, so remember I was saying that looks like that could be the best. It's possible that's the strongest bar here since the S&P 500 opened. Oh, came all the way back. It's pretty sad for the S&P 500 there, isn't it? Wonder if the repo market will continue to function after the... Oh, what? Are you talking about the European market? You know what's really difficult for me with those ones, TLA Trader, is that we're constantly hearing things that to me sound significant. Okay, like you get on YouTube, what's the big thing on YouTube? Oh, the Chinese real estate market is collapsing. Market doesn't care. It seems to me, my wife just came back. Seems to me Chinese real estate market completely collapsing may be a significant thing to the global economy, right? Doesn't do anything, right? And I guess when we had some stuff going on in Italy, we did see some moves in the market, but it was just kind of a little blip. And us in the United States, like we talked about it that one day, and we've all forgot. I don't even remember what happened. You know? How's this happening? It seems like that there are significant macro developments going on out there and the market doesn't react to it at all. Well, the 30-year it looks determined to just drag us to a new low there. Because look at the way it's trading. I'm sure, well, at some point, it's certainly, yeah, it is funny how it works, where it's all of a sudden it reaches a point where it's like, oh, now it matters. Now it's the only thing that matters, right? And you spend all this time where you're looking at it and you're like, wow, I could have made all of these decisions just based off of what we knew about the Chinese real, and I didn't do anything because I didn't understand why the market wasn't reacting to it at the time, you know? Markets are not informationally efficient, so we got to be really careful about making our decisions just based off of what the market's doing, right? But the problem with that trade is that I don't understand enough about the Chinese real estate market and how that affects the global economy to really make a decision about a trade based off of it, you know? Like when it was the repo crisis in the United States, right? That was a good example of that. Like at the time, the markets moved a little bit about it, but I think most people probably can't remember how it actually affected markets, and it was just a little blip that they all forgot about, right? But at the time, because we were experts in treasuries, I had a pretty good idea of what was going on, and I was able to make some money off of that one, right? But the ones that we're seeing right now seem to all be stuff related to other countries, and I don't know how it's supposed to shake out, or if it even matters to the United States. 2 ticks up. Still in the hole. Although the 30-year looks pressured. 2 ticks up, but looks pressured. I remember when little hole grease was the whole reason behind every sell-off a few, yeah. No, that one was significant, Sirlax. You remember the European debt crisis, that was like a 7-9 month thing. And that was a very severe downturn. Like one of the things that I continue to look at, or that bothers me with the way that people try and interpret markets, because people are always saying, okay, you know, in order for us to consider it a recession, you need to meet these metrics and that sort of a thing, right? And so what people are doing is they're trying to turn it into binary decisions based on technical analysis, right? Oh, okay, so if it's declined this much, then we're in a bear market and then I want to sell, or that sort of a thing, right? But I think that what the whole grease thing showed was that the markets are just too distorted to even attempt to try and make that kind of a play, right? In any other situation, the European debt crisis would have been a recession, and quite a significant one as well. But because we were dumping so much liquidity into the markets, we didn't get that, right? If the Federal Reserve and everybody hadn't been printing oodles of money, then the European debt crisis probably would have moved us to the point where they'd be calling it a recession, right? That move was pretty significant. And, you know, going back that whole 10 years and they say, oh, we went a really long time without any kind of recession or crisis. That's not true. We had 2 or 3 crises during that whole time. It's just you don't see it in the price as much because of the actions of the Federal Reserve. So you have to change all of your benchmarks, essentially. I'm seeing continued steepening here. They're buying the 2 and selling the 10. Did I change my... Well, now I can't even remember. I have to go back and look at it again. I have 4-1. No, 4-1 is right. Or the 2 and 10. Okay. 10-year finally ticked back down to 0.1. Problem is the 0.1 has kind of been like I would have to say from a technical perspective, 0.1 has been acting as support. Look at that. Like if they trade down through 0.1, it's going to be like 2K to do it. There's the 30-year touching its low again, though. They could definitely pull them under. I really like these movements in the markets where you can really kind of clearly see, like, picture in your head, like, these different forces. Like, you've got 3 people swimming in the water, and ZB, she falls under and she decides to drag her sisters with her. Like, that's how these things often play out, right? It's one of them just goes, and the other 2 just get dragged down with it, even though they don't want to. Yeah. Now they have to breach 07 first. Yeah. The liquidity is not really too healthy at 08. It could still happen, but at the moment, the offer is too weak. Okay, so there's a little bit of a change. That might help. Let's reset. So you see a little bit of iceberging in the 5-year. Okay, so that uptick had a little bit of fight back in it in the 5-year. That's interesting. And look at the offers. Look at the amount that traded into the offer at 01. And there was even some orders that went into 01.5, I guess. I think somebody just bailed there. Now, for me, I'm kind of thinking I'm not going to hold this all day. Sure would like to see the 30-year breach 07, though, man. Come on. Do it. Do it. Let's see a good stop run before we end the stream. How much does it take to make a one go offer? Nope. Probably that 08 needs to go above 200 to make it happen in the 30 year. Okay. As soon as I see that, somebody's like, okay, Seth, let's do it. They put it on. Well, it didn't quite go. Give it some time. You know, it happens incrementally. It'll be like, okay, they put it 200, and then next time it goes over 200, and this drops below that. And then they trade it. Ah, there you go, like that. Ah, but it didn't clear, and they put another 200 on it. That's a much better offer, though. Okay. Well, one in the 10 years. A little poor liquidity. And there's a 5-year downtick. Not followed up, but that helps. Not even one order. Ugh. Well, I feel like it could still go, but it shouldn't be that hard, right? To get a new low. It shouldn't be that hard. I feel like if it does go and the 30-year pushes lower, that's like market making shenanigans and not a large meta order. I could be wrong, but I mean, I am seeing the selling. The cumulative delta in the 30 years is definitely on the downturn, but there's the 5-year. That helps a little bit. Okay. There you go. There's a new low in the 30-year. And some stops on it too, yeah. So I am noticing that you're getting decent amounts of volume trade in the 10-year. Both directions, really. I mean, I'm seeing 1300s there on the offers, for instance. Interestingly enough, though, it all happened as the 5-year finally decided to succumb, so it actually, the curve flattened back out a little bit. Now here's the 10-year at 118 evens. You should expect to see a lot of volume trade, right? Can they breach it though and make it down to 30 and below? Ooh, 7. We're gonna have a 10k there. Not 10. 73 is still a lot though. There's a new low. Oh, that's not a new low. Equal to the low. Sorry. I jumped the gun. Oh, wow, really? 4K sell. Them iceberging. Okay, this trade makes me nervous because I've seen this go both ways really strongly. I've seen some trends where they'll break through 7K, 5K, you know, maybe this one ends up being 3K, but that's like a lot of volume to push through, and it will just like puke lower. And like those are some of the strongest trends I've ever seen, was when there was like usually it's on an up move. I don't think I've ever seen this on a down move, but when they push through a lot of volume like that at lows and then they make it through, it can just slip really fast, right? But I've also seen situations where that's enough to make it reverse. And in both situations, like, you get what I'm saying? Like, if I was going to be trading on the volatility itself, I would be trading to expect volatility to increase from here, right? Because they just took out a lot of liquidity. Yeah, look at that. They're still absorbing. Well, I still got a little bit of time, but I'm gonna have to probably, well, this is a really interesting flow today. Okay. I'm out. Well, $20 for 2 hours. This seems like a bum deal, but I'm not gonna get into this. Listen, here's the thing. You will make more money the longer you can hold the trade, right? And if you can swing it, you know, because who knows? This could continue through. We are seeing some volume. If this turns into a strong trend, it could be like a really wild, strong trend. And I could be sitting here being like, oh man, I missed out on $100. I only took 20, right? But what happens is when I get into that mode, I always want to hold it, and I'll hold it when I really shouldn't be. And what happens is when I get anxious, I hold tighter, I think. And what happens is I'll get in a situation where I'll hold tighter until I end up taking a bad loss, right? And I don't want to start the week out getting into that mode and trying to hold a trade while I'm doing my day job and stuff, right? So I want to take profits. That was as good a spot as any. Make $20 net. It's not actually a bad trade. Actually, you know, and here's the crazy thing is that there was a point at which I said, hey, I really want 285, right? Do you remember that? Or sorry, it was 2985 rather. I wanted 2985, and there was a chance where I could have hit into it. If I had hit into it, I would have only have gotten, well, I don't know. I mean, that might have changed the trajectory of things. It can. Like, you'd think one order doesn't matter, but could that have been enough that maybe they would have tried to push it a little bit even further to try and pressure me? Possible. But just based off of what happened, would have only had one tick against me. So I took that trade. I only took 6 adverse ticks. I did not think that spot was very good, but it actually did end up being pretty good. And to consider that I held it for 2 hours, I only made $21, but I only had 6 ticks against me. That's pretty darn good. And also, we are seeing a lot of volume trade here. So It could trend, but that could turn that 118 area into a really big magnet. Man, I am so sick of these spammers. So on Discord, we've gotten rid of all of the bots that like you know, try and put out I don't know what you say, invite links. We've gotten rid of all of the invite link bots, and now we're getting people that are like, hit me up on WhatsApp. Basically just other ways to try and get around the censors. I'm just gonna have to watch it like a hawk. I think it's the same crypto idiot. Okay, so I got out at 12. Okay, so let's see how much I'm missing out on. Maybe $5 right there. I don't know, guys. It's a little weird to see like so much volume trade there, and then they get down to the bottom and they're like, they don't want to do anything. Oh, maybe 30. No, not yet. Not yet. That guy there at 30, he wants it for sure. See, if I'm the market maker, let's just assume I'm the market maker and I just have the ability to fuck with people, right? I see this guy, he's there at 30. I know that it's going to go down. So if I want to piss this guy off, what do? I fill him at 30 and then I make it go way further and make him go like, oh man, why did I get out at 30? Right? That's what you do. We could get more trend out of this. I wish I could sit and stay, but I don't think that it's appropriate for me to try and hold a trade. I say that a lot, don't I? But I mean, I think it's because I know that those are things that probably reduce my profits overall, but I think that to keep myself in a good spot, that it's necessary for me to do sometimes, you know? There was some points during that trade that I was really anxious to, like when I was holding the baby, when they were breaching 03. So I think I have had enough of this for today. Different action today. Interesting that the 2 and 10 seems to have steepened out a little bit, but the overall curve, like the 30-year end of the curve, it looks like is going to end up flatter in the end. Also, what do you think? Do you think that anything will change in the markets with them getting the 10-year yield above 3%? What do you think? That big order is still there. Can I wait? I don't know if we're gonna, you know, even if I waited at 9 o'clock, I don't know if we'll get it before 9 o'clock. So watch, I'm gonna leave it. It's gonna go British. This is just one of those days. Am I like talking myself into a self-fulfilling prophecy, or do I actually see something? I feel like this is one of those days where it does nothing and then I leave and there's this huge push. Seems like the situation is appropriate for that. Like there's the reasons that they should be moving down and they just kind of haven't. Perhaps because the European traders that took the short all exited their trades. They have to exit all their trades first and then the selling can continue. That seems like a reasonable explanation. Just a theory. What about, let's just do a little rundown of the markets here before I leave. Gold's higher. So despite interest rates rising a little bit and being a little bit higher than last week, well, but you know, gold and silver took some pretty big hits in the overnight session. So come over here, show you some pretty big hits in the overnight session. So that's just kind of crawling it back a little bit, but they've done well this morning. S&P 500 taking another dip lower. That's ugly. And oil getting creamed down. How big is it? Market analyzer. Almost 3%. 2.95% right now in oil. NQ is down 2.18. So this is a bad down day, man. And the S&P 500, by the way, not showing any signs of falling back. I mean, listen, if there was a trade to take, that was the trade, right? Is just go short the S&P 500. Because that's a good 30 points right there. Also, we kind of come in and look at some of these commodities. Copper's pressured a little bit. We saw a decline in corn, although they recovered it back out. In Bitcoin didn't really move much this session. So when I look at Bitcoin, that looks like to me like holders hodling on. But if the macros push us lower, man, look out in Bitcoin. So I think that's good for today. I think we'll leave the title for today. We're doing a little bit better. We did get more viewers today, so I do think that it is like summer is ending. What do you think? Are you happy? You said I feel a little bit of like sadness, like I missed something, or I don't know. I don't know what my deal is. Isn't the Bitcoin trade over for now? I don't know, dude. I'm just saying, Bitcoin tends to follow risk assets. If the NASDAQ starts on a bear market run here, they lost 2, maybe 3% today. Let's say that they have another 1 to 2% down day tomorrow in the NASDAQ. That's going to put Bitcoin right down at those lows. And then once we're below 20K, you could start seeing people puke again. 4182. In this price, I see more than 400 contracts. Can you give any advice? Yes, I can. Well, so first of all, 4182 is like really far away, so I wouldn't read too much into it. I do have a video that talks about how to deal with large orders and spoofing, where I talk about it. That price doesn't seem too significant, so I don't know why there's a large number of contracts out there, but they already fleshed out many weak hands. Well, they're not even close to done. I know it seems silly to say that, but guys like Celsius were just the obvious scams, dude. There's plenty more to go. And now I'm kind of thinking more about retail holders or all of the people that have bought in the last like month, right? Like Mr. Sam Bankman, who bailed them all out, right? At some point he's going to be feeling the heat, right? What about our friends over at MicroStrategy? Yeah, I could go on. I gotta go. I'll see you guys tomorrow. Stay profitable, friends, or at least don't blow it all. Markets could get crazy.